Oh.
He's in for a big one, looks like today.
I can hear you.
I was wondering who's singing. Prashant's on a roll today. I think it's going to be a couple of laughs.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Nikkei 2 trading with gains of 1.25%.
The committee obviously will look at the best practices for other regulators in the world as well.
There's one more level, which is 24,457. That is the high that we saw on Tuesday. It's absolutely flat on the Nifty, 24,340 or so on the Nifty.
We're telling investors to buy. So that's been the case since January.
The intraday high on the Nifty was actually closer to 24,600. So we've slowly given up gains.
Fallen to the lows of the day, though, is JSW Steel, and that is after the Supreme Court verdict rejecting JSW Steel's resolution plan for Bhushan Power and Steel.
So you can go on a review petition only if there is a fundamentally wrong error of judgment made by the Supreme Court, which I don't think is so in this case.
Tariff threats have had some of the biggest companies of the world suddenly loosen their purse strings to pour billions into the US as investment.
Pakistan has violated the ceasefire along the line of control for the 8th straight day.
Well, we are slightly off the highs of the day, though, but still there is some recovery from lower levels, so it's a neither here nor there sort of a case.
Well, the markets, of course, got nothing on them. It's been a roller coaster ride. I mean, 200 points higher, down in the negative, back up about 50 points, down 40. So, depends on which half hour you're looking at, because it's been so many phases. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. Last 60 minutes of trade today and this week coming up. I'm Prashant. With me, my colleague Surabhi and Rima here. And Nigel is joining us from the newsroom floor. And Nigel is the man with all the news for today.
He's the blockbuster man of the day. Friday action, Friday factor with Nigel. Lots coming.
It's been that sort of a day, right? A lot of news flow, but I think we'll address the big news today with regard to JSW Steel. An absolute shocker, but we'll get into further detail later.
Absolutely, and it is a shocker. I mean, it was not even on the radar. I mean, obviously there was some case going on, but who would have thought that, the Supreme Court comes in and essentially nullifies this entire transaction. It all goes back to zero and years old. So judicial risk in that sense, right? I mean, one thought that is kind of a thing of the past, but obviously it's not. And really a bolt out of the blue. Stocks down 6% as we speak, and it's a big one. We'll, of course, cover this from various angles. We are going to be speaking with a a bankruptcy lawyer, an IBC specialist who will join us in about 5 minutes. And of course, at 3 o'clock, we'll have Abhizar Divanji, and we'll sort of ask him from a banking perspective what this means. Because, I mean, you know, JSW paid the creditors when that resolution happened and they got the Bhushan asset. Otherwise, I mean, it's very, very stock specific. Market breadth is negative. Some 1,600 stocks are lower, 1,100 stocks are higher. So doesn't look like there's any direction at all in trade today. Reema.
Well, as we speak, virtually at the day's low, the Nifty is below or at 24,300. The day's high was 24,600. So from the high, we've given up close to about 300 points in all the intraday gyrations. The mid-cap index is down close to about 0.8%. The advanced decline ratio, 2 stocks advancing for 3 in the red. In terms of individual stocks, it's JSW Steel, which has taken the hardest knock, 6% down. Two-wheeler names, X of TVS Motor. So Bajaj Auto, 2.5 lower. Hero MotoCorp has declined by 2.3%. And you've also got cuts in Eicher Motors. All 3 two-wheelers down over 2%. And other notable drags include a Britannia, a Sipley, a Nestle, HDFC Life. On the way up, Adani Ports has crossed the 200-day moving average. The top Nifty gainer, 4% higher. Bajaj Finance rebounds after the fall that it had in Wednesday's trade post numbers. IndusInd Bank too is recovering. As I said, TVS Motors is higher. Maruti Suzuki, good numbers, auto sales numbers for the month of April. And Reliance Industries, the star stock of the week, up today, up every single day of the week, post the numbers, 9% gain for this week.
Absolutely. That's the stock-by-stock reaction, stock-specific reaction. But guys, I have to point out something is shifting in the overall trend. April was a great month for India. We outperformed almost all global markets. But look at the underperformance today. Actually, global markets doing very well. Asian markets closed with gains of 1%. Some markets 2%. In fact, just for that reference, we should pull up Hang Seng. Let's see the final close on the Hang Seng. 1.7% up on the Hong Kong market. China, everything. Japan was up about 1%. Europe right now is powering through 1 to 1.5% up on European indices. If you look at the FTSE, the CAC and the DAX, those markets are roaring. The German market's up 1.6%. US futures are higher. So the global markets are doing their own thing. You can say they're catching up and India kind of was, bolting out the door earlier. But the fact is that it's becoming quieter. And Tuesday and Wednesday were just quiet days, consolidation days. Today is a day of volatility, first day of volatility. And that's really showing up in the broader market because on the broader market side, the index is down 1%, but the advanced decline ratio has been negative for the better part of the day. And a lot of the result reactions, I mean, Federal, Bandhan Bank, a lot of these reactions have also played out on the downside. But Nigel, the star of the day has to be JSW Steel. I mean, just when you think the market is all about the earnings of the day and you're looking at US and Meta and all from the blue, like you said.
Well, that's right. It's going to have bigger implications as well with regard to what goes on from here on. Because for JSW Steel, what happens? They've paid 20,000 crores. They've incurred some capex and they've used the cash flows as well. They've ramped up this asset from around 2.75 million tons to around 4.5 million tons. And they have plans to take it to around 5 million tons. How does the Supreme Court unwind all of this is going to be a question. And just one more point. JSW Steel's pain could be the other steel company's gain. And I'll tell you why. Because if in case JSW Steel cannot operate this 3 million ton plant, effective capacity is 4.5 million tons, they're operating it around 3.5 million tons approximately. If this goes out of the system, there's going to be a domestic problem here. There's going to be a bit of a shortage. We have safeguard duty that's implemented on imports. And if you take 3 million tons, 3.5 million tons out of the system, that's talking about 2.5 to around 3% of the total capacity here in India that goes out. So that's going to be very, very important. Will there be some more pain then for the customers? Because steel prices, in all probably will go up. It's going to be very, very interesting to see how this pans out. I'll want to know whether or not JSW Steel has to stop operating the unit from today or tomorrow, because that will have bigger ramifications for the industry on the whole. Let's see how this goes.
Okay, no, absolutely. And, discussions coming up. Mitesh is with us. Mitesh, what does one do in terms of trades?
Yeah. Prashant, so I think, there is a stock called PI Industries, which I think is still looking good in this market. So buy here with the stock below 36.55 for targets of 37.50. And on the other side, a couple of stocks also turning slightly negative. So I'll have sell on Tita Wagons, keep the stock at about level of 760 for a target of around 705. And on the index, I maintain the range-bound view, despite the fact that today morning we had moved up beyond the upper end of the range. We're back there. I think the hourly indicators still look very tired. So I think I still believe that there will be consolidation going on, and 24,500, 24,000 broadly remains the range.
Okay, got that. So a couple of trades coming through and range kind of markets. Mitesh, we'll come back to you with more. We have PV Shiju joining us, managing partner at India Law LLP. Shiju, good afternoon. Good to have you with us here. Thank you for your time. I mean, I think we all briefly alluded to the judgment from the Supreme Court. As a sort of IBC specialist, Shiju, what is your take on this? And is there any precedent? What happens from here? What does JSW need to do? Does this asset go back to a newly formed committee of creditors? What's the road ahead?
Yeah, the initial reaction is quite shocking, but at the same time, Supreme Court has reiterated that also the IBC process should be transparent, fair, and also a timely implementation of the plan. These are the basic principles of IBC. So Supreme Court has reiterated that. As far as the whole plan is concerned, the major problem, the Supreme Court has stated that, I have not seen the judgment yet, but it basically does not comply with the legality provisions under the IBC, and also it does not process, it's not a fair or transparent process, and also not providing for a timely implementation of the plan. Only the reason for that, because of the use of the optional convertible debenture route, which is not bringing the money upfront instead of an equity infusion. That is the major reason. And Supreme Court, it looks like, came heavily against the resolution provisional and CUC also. So the next ground, yeah, it's very challenging. The whole process has to be revamped. And as far as the JSW is concerned, court clearly stated that it's going for a liquidation. So a liquidator will be appointed, a new liquidator will come into play. And basically, he has to put the company through a liquidation. So yeah, JSW is not going to get the assets directly. Only through a liquidation process, anything is possible. That is open for everyone.
But Shiju, what happens to the sunk costs, the investments that JSW Steel has already made in Bhushan?
Basically, I came to know that some certain statement made by the lawyer earlier regarding how the money will be gone back or will be distributed back. So there was a statement in the court, but that's what I heard, saying that if the plan failed, how the money will be paid back. So it will be clearly written down in the judgment.
Shiju, what happens in the interim? From today onwards, JSW Steel will have to stop operating the unit?
See, basically, since the plan is under the implementation schedule, there will be a monitoring committee already. So the monitoring committee will be continuing till the liquidator will take over the company.
Okay, so that means the plant continues to function, right? According to what you expect?
Not the plan. The company will be kept as an ongoing concern as of now by the monitoring committee. Maybe a resolution plan may be a part of it. Generally, resolution applicant is also a part of the, not applicant, resolution provisional is also a part of the monitoring committee. So till the liquidator takeover, the company will be kept as an ongoing concern. Then liquidator will come into play, and he has to sell the assets now. In the CIRB process, the company is sold as a going concern altogether. Now he has to sell the assets of the company, which is even the plant.
And JSW Steel, and when it comes in for liquidation, JSW Steel can be one of the participants?
It can be one of the participants. There is no, because it's there is no disqualification as such. It can participate.
Interesting, because the company does roughly 3,000 crores of EBITDA, and it could be valued at 21 to around 24,000 crores, very, very roughly. And they have already paid 20,000 crores. So, they could be best favorably placed if in case they are allowed to go ahead and bid for this unit. But it's unclear about how they get, how much of the money they can get back and how that is worked out. Guys, you want to take over?
Shiju, I just had a question. Even before we talk about the liquidation process starting, wouldn't you expect JSW to file a review petition? Do you think that route would be open? And since you're saying the problem seems to be using these optionally convertible debentures and not bringing in equity upfront, could that be a possibility that the company says that, okay, we'll bring in the rest of the equity upfront and, please review this judgment? Would you expect that?
See, basically, review petition is on a very limited ground. Okay, it cannot just go and say that we'll bring it up front. Can only go for a review petition on the same bench, saying that there is some apparent error or some technical mistake or some new facts. So review petition ground is very limited, that perspective. Yeah, I believe that the JSW will try to go for a review, but a very limited ground for review.
Would you be, are you a bit surprised, Riju? I mean, the market absolutely is shocked. So would the business fraternity be, because this was all done. I mean, it was approved at the NCLAT, it was approved by the company of creditors, the money had come in, the plant was up and running. And for this judgment to be coming today, I'm not too sure if this was the court taking some sort of suo motu cognizance, or, I mean, just walk us through how you think this has come about today, because this will make any other ongoing resolution processes perhaps a bit in question as well.
See, as an IBC lawyer, I've been in the IBC since its inception. First, when it came, because JSW takeover of Bhushan Steel, highly contested and very successful resolution process, a success story for IBC, which we desperately needed. So yeah, the first stage came as a shock to me, even though I know the implementation was delayed. There was a lot of ED issues in between, so it was not completely a smooth road. There was ED attached the property, there was some discussion, there was some issues regarding detachment of the property, then High Court has to intervene. Issues were there. So, however, Supreme Court striking down the plan, the first reaction is shocking, but at the same time, I would not completely shocked also, because at a later stage, when I think now, because see, the IBC is not like your M&A transaction where you structure the plan like a real M&A transaction. So it has to be clearly a transparent and timely mechanism where a fair and equitable treatment and a quick resolution is provided. That's what the sole purpose of IBC. So when you do a lot of structuring through OCD, debentures, such instruments, a lot of uncertainty also kicks in. So that is one of the reasons IBC struck down. So in future plans, when you structure, so the participant would be more careful to make sure that the instruments and the structure is very easily and transparently and fair.
Are you, Shiju, are you sure this is the reason? The OCD?
The reason OCD is one of the main reasons, because of the Supreme Court. See, basically there are two reasons. One is OCD, then there is delay in implementation. But I have noted that Supreme Court stated that NCLT and COC should not have approved the plan. Such course arises only if the plan itself is per se contrary to the legal provisions.
A lot of the resolutions which are underway, are these instruments involved in other ongoing sort of resolutions? Is it a much used route?
Yes, it is a frequent problem we always see, because there is a tendency to structure and defer the payment through other instruments. So even when we raise certain objection to that as a lawyers and all, but IBC per se does not prohibit that. But
I think this now sets a precedent, right?
Yeah, this
it'll have to be.
So when you use a structure like this, you should be able to clearly justify why it is used. It should not be only for the purpose of deferring the payment.
And you don't see too much of a case of a review petition like you're saying. You don't think that there is a case for it?
I really doubt. I'm very skeptical. I would not say there is no, but I'm skeptical, that's all.
Okay.
We spoke to HP Ranina on this, and he said that you can go to a review petition. I mean, they can go with new facts, and the new fact is that they will now, implement this via the equity route only. So they said the review petition on existing grounds is not possible, not legally tenable. But if you change the facts, that is a new method of completing the transaction, that is pure equity as was earlier planned, then they can go ahead with a review petition. Just one final question, Shiju. Are there any other instances where the implementation was not executed as per plan or within the stipulated timeline? Is there any other case which could face a similar fate?
There are many plans. There are a number of plans which are really delayed.
A lot of sleepless nights then, I think, within the legal as well as in the business fraternity. I mean, these ongoing IBC resolution cases that are going on. Thank you very much, Riju. Very, very helpful perspective on this. And let's see what the next couple of weeks bring on this matter. That's JSW Steel, landmark judgment today from the court striking down the resolution of Bhushan Steel. I think we have Prakash Diwan with us. Prakash, we spend a lot of time on this because it's been such a big story. Now, if you were a JSW Steel holder, this has just hit you like a bullet from the blue. What should you be doing? Because you're suddenly down 6% in one day.
Yes, Sylvie, and in all fairness, this is something which, it's been too late, too delayed in terms of whatever the verdict is, whatever the, identification of discrepancies that has been explained. My sense is there will be a review petition for sure, and there will be some grounds, middle ground on which there will be resolution that would probably come at some cost, of course, at some cost, because the company will have to meet up with whatever, discrepancies that they've been talked about or they've been asked about. But remember, they've already incurred a lot of expenditure. The plant's already running. So liquidation is something which is not going to work very well. And it sets a very difficult precedent for others to kind of, look at some of these larger transactions. So I would believe this will be painful. And then probably the stock would get into a little bit of a cold storage for some time, not do anything much. And if there is anything, it would only be negative. But I don't expect some sort of a bounce back. So, no point catching a falling knife here. People who have it will have to look at it from a longer term perspective, because when the deal happened, there were certain salience that came in terms of incremental capacity at a particular cost, which seemed very attractive. But given what's come out, it'll probably be neutralized or undone. So that is where the stock would probably move back to in that sense.
Prakash, just to stick on this point itself, would you be a little clever and maybe try to play another steel maker saying that, hey, JSW Steel is going to be in trouble. They have been the preferred name. They traded very high valuations. If money is not going to flow there, and if in case this unit is shut, it could create a bit of a scarcity, which in turn would result in higher prices. Do you think that's a possibility? Then you would maybe look to play SAIL or play Tata Steel?
Yes, certainly, Nigel. That's the second order thinking that will be very effective. Remember, 3.5 million or 3 billion tons, and then there was plans to enhance it to about 4.5. So, definitely is a bit of a vacuum in a market which is definitely looking at adding on consumption. But I don't know whether, it's just going to be pricing that will get so badly impacted. Even the government would not want, steel prices to kind of generally be increased, just because of this shortage that's been created. But anecdotally, we've seen other players do end up having this much simpler, much more smoother way for, at least their output to get consumed. So from that perspective, Tata Steel, Steel Authority, good balance sheets, are doing the right things. I think SAIL is undervalued from a even if you take this opportunity aside, even from that perspective, it's available at very decent, valuations. And the replacement cost itself is so high these days that some of these stocks are like, some of these OMCs where you may not see great revenue and profitability, but on the sheer replacement cost basis, some of these at 115 SAIL is definitely very attractive. So you will see money coming in, but it probably might take a few days, a week or two for that to happen. It might not be just an immediate move that people move out of JSW and then straight away latch on to one of these. But yes, it makes sense to have that arbitrage trade.
Prakash, in the two-wheeler pack, TVS Motors has stolen a march over the others, literally separating the men from the boys. Today, you've seen correction in all the two-wheelers barring a TVS Motors, and strong number, 16% year-on-year growth. In the two-wheelers pack, would you continue to bet on TVS Motors or any others looking attractive now?
So, Rima, two-wheelers has been a bit of a sideshow, thanks to all the news flow around EVs, four-wheeler EVs, and the Teslas of the world coming in and all. We've seen that two-wheelers kind of got neglected. There are very few brokerages who have positive, views on two-wheelers by and large. And all of them are going through their fair share of struggle. You have an iShare, which is not finding too much of traction in terms of some of the newer launches, which was expected. Bajaj has its own issues with the CNG still to kind of get established. Exports have done a couple of flashes, but it's not something very consistent given the global scenario. And Hero, of course, has just been sideways in terms of whatever they've done. TVS, to the contrary, stands at a very good mix of the executive class, the entry-level bikes, the scooters, and of course, a significant share in the EV market, which has been growing very steadfastly, and they have very decent margins there. So it's one of those few companies that is being profitable while upselling the electric portfolio as well. So I think from that perspective, it does outshine some of the other boys. But whether you want to put more money into this, I would, to be honest, I would wait for the monsoon and some sort of a pickup in numbers and demand that tells you that TVS will start doing well in the segments that it is. And then it will probably be worth it. Till then, you might have a superiority that brings in some premium on the valuation, but it might not last too long, given the overall scenario for two-wheelers still being a bit subdued.
Okay, all right. Got that point. Prakash, thanks very much. You have a good weekend. And let's see, come back to the markets next week. We'll have to take a very quick break. But before we take that break, here's some good news. Network 18 beats Times Internet to become the #1 news publisher on Comscore. News 18 races past the Times of India to be the #1 news brand in the country. That's not all. At the Social Plus on platform leadership network levels, Network 18 is the runway leader as per the Social Plus MMX Comscore report for March 2025 with 315 million unique views, which is 55% more than the nearest competitor, Times Internet at 202 million. News 18 also races ahead of Times of India in terms of Social Plus Max MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall with 183 million unique views as per the Comscore report for March 25. As per Comscore social media metrics report, Network 18 is 2 times bigger than the nearest competitor with a 54% reach within the 389 million overall social population. And speaking about Indian languages, in terms of Social Plus MMX cumulative reach, News 18 Indian languages is the leader in the category with 182 million unique views as per the Comscore report for March 25.
Okay, welcome back. Well, we've got the market, which of course is not doing very much. It is doing a little bit, but not too much. Down, I think down, this is the third or the fourth move. You can just look at what's happened. Surge, sell-off, surge, and sell-off, and surge again. So, lots of moves up and down on the index. Jigar Mistry is with us, co-founder, Buoyant Capital. Jigar, good afternoon. Good to have you with us here. Nigel and I were earlier talking about how metals and cement was your area back in the analyst days, Jigar. So, Don, the analyst, had for a bit. We just had this discussion with JSW. Any thoughts on the situation now that JSW finds itself and implications?
Hi, Prashant. Thank you as always for inviting me to the show. I think it's quite a stock-specific situation, right? So it's not so much as an industry-related question as much as it relates to JSW. And I think all the legal luminaries that you called on the show essentially point to the fact that there has to be some sort of a petition given how much money has already gone into this. And eventually, if it's a case of business rather than just a letter of the law, then I think they might be keen to look at it. In between, when by the time this happens, you will have some sort of situation. And remember, see, with metals or cement, it's always the marginal quantity, right? It's never the total demand supply. And in the situation that some amount of steel is taken off the block, you will see a situation which will make it an even starker business call rather than sort of the letter of the law. So my sense is that you would see some sort of a resolution come through. What shape and forms it takes in the courts is a little difficult to predict given how long this review has taken the time to come. But steel per se is nevertheless interesting. So the last time I was on the show, we did sort of discuss about commodities, and those businesses make a lot of sense because if the dollar is depreciating, everything is denominated in dollars, and steel is one cycle where you don't really see a lot of China flooding on an incremental basis. So if this gets resolved, then obviously steel does make for an interesting play.
Hi, good morning, good afternoon, and thank you very much for joining in. Lots of earnings reactions visible on the screen. You've got Industars down nearly 7%. Eternal is holding up despite the big losses in quick commerce. Perhaps the street likes that they are being aggressive to protect their turf. You've got Nugent Software up 3.5%, come off from the highs, but that's up after the recent correction. In the earnings that we've seen today and over the last 48 hours, which one has been the pick of the lot?
Right, Rima. So, sort of see, as an overall general sense, I would say that earnings should start improving over the quarters, right? So, the way we used to do this even during COVID, we used to see like not a FY20 drop and a 21 pullback, but the way we used to see, FY19 over 21, I think a very similar situation will go in the earnings per se. So you will have the April to June quarter last year take a beating because of general elections, and since then you have seen successive quarters really going down. That base effect will now start coming into play. So stock specific, obviously Indus was not really a great set of numbers. Zomato is not so much, or Eternal is not really so much a question about the cash flow versus sort of the plan that they plan to execute. And given where competition is, on one hand, you have sort of Reliance come through and challenge things. On the other hand, you're having questionable Zepto financials and people weighing that in the process. But my sense is that overall earnings should start improving just basis, the base effect and other than anything else. And given the correction, at least we have seen in a large part of the broader market, few businesses which are even okay-ish result will not really see a large downside.
Okay. That's the sense. Jigar, hi, good to have you on. So, what are you liking in the market right now? Where do you see some earnings momentum? I mean, the tariff news aside, I think the other watch point is earnings. And where do you see that?
Right, Sylvie. So, I think, you will see this play out in one sector that we are very keen on, and I'm sure Nigel will want to chip in here, because cement looks like a sector where, you've seen, I remember this time, 2004 to 2008, riding on a very high capacity utilization, the sector's EBITDA per ton overall moved up almost 2x. Since then, since 2008, there have been a lot of capacities that came through, and because of which, and sluggish demand, you saw EBITDA per ton across the industry quite flatline. Now what might actually end up happening is that the industry has gotten consolidated. Two large players have consolidated it. And there might come a time where sort of they start taking price increases seriously in a way where you cover up for inflation and more in the EBITDA per ton. The way to play this thus far has been buying all the acquiree companies, right? So you've seen multiple sort of deal-related upsides on them. But the way to play them going forward could very well be the larger names, because that's where the impact will be quite meaningful. Like, Ultratech saving sort of 300-400 rupees on costs is thousands of crores in EBITDA incrementally, right? So that is essentially the way what we like in the current scheme of things.
Okay, all right. Fair enough. VMart, by the way, numbers at the bottom of the screen, and look at the earnings. 18.5 odd crores compared to a loss of about 39 odd crores. This is what is coming through. Stock spiking as we speak. I think last quarter as well, the numbers were pretty solid, pretty strong after a few years of absolutely lackluster growth that VMart has seen as a tier 2, tier 3. Actually, more a tier 3 city sort of operator, retail stores. But now, of course, it is jumping. So 17% growth on top line, and of course, at the bottom line, it's swung into a profit as compared to a loss same time last year. Jigar, just come in on anything you like in the auto ancillary space. Many stocks here have taken a knock. And, the thing with auto ancillaries is not just sort of serving auto markets. So many of these auto ancillary firms now cite non-auto industries as big growth areas. We spoke to one in the morning, Sona BLW. What do you like, Jigar, here?
Not a lot of things, Prashant, here, because see, incrementally you are accounting for the fact that many of them were supplying to either railways or some parts of it, reasonable parts of it in some cases were exports. Till the time this sort of export scenario with the tariff tantrums doesn't get resolved, one needs to look at where the earnings growth could come through. Secondly, even with regards to railways and related capex, I think the way in which things are shaping up both at the central and the state government level, like we analyzed the state budgets of 16 states, and these are the ones where the freebie bill, for the lack of a better word, is now approaching the capex spends, which means the capex for many of these are going down almost 4-5% on a YOY basis. In that, and with sort of central government also taking a foot off the pedal, the complex of earnings could change away from this railway, defense, PSU to a lot more in consumption, and that's why you are seeing some of these results also play out fairly well, where this incremental money that's put in the hands needs sort of a way where either it gets invested or spent. And we think a better way to play this, given the extremely high valuations in many of these cases, would be, the consumption plays rather than capex plays.
Okay. All right, Jigar, we'll leave it on that note. Thank you very much for joining us. Good to have you on the show today and get that perspective. Let's just get back to the market. Not much has changed. The Nifty is absolutely flat. 23 points on this one. The Midcap index continues to trail down almost 400 points at this juncture. However, on a day like today also, you have some interesting gainers. CRISIL had a weak quarter, but the stock's doing really well. Perhaps the market's moving on, looking out to the future in the commentary. 5% up on that stock. PNB Housing, after those block trades, has had a decent session today. On a day like today, Credit Access Grameen, 7% on that stock. So all kinds of names. And RailTel obviously was a bumper performance. RailTel has been up almost, in the morning it was up 9-10%. Now it's up about 6%. The quarter has been very good, 50% plus growth at the top line and at the EBITDA level as well. So some green pockets within the mid-cap basket. But for the time being, let's take a very quick break. We'll come back on the other side with some final trading calls coming in with our technical experts.
Right. Welcome back. This was 3:05, 25 minutes to go for market closing. Mitesh Thakkar is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, from the time that we spoke at 2:30, another reversal. What's ranged market basically, not really going anywhere in a forceful manner. What's your sense?
Well, I think, it will remain this way. I've been calling for a range, consolidation. Looking at look at the hourly to hourly charts, I think the indicators are slightly tired. So typically, I think this will lead into consolidation. And therefore, I think this movement might continue. On the stock side, STVT or Torrent Power, keep a stop at about 1507 and look for a 1470 kind of a target. While the stock, which I would still recommend, buying would be a BTS, would be a Reliance with a stop at about 1408 for targets of 1440.
Okay, all right, got that. Thanks very much for that, Mitesh. You have a good second half of the day, a good weekend, and we'll see you again with the trade on Monday. Now, let's move on. Marico is expected to post quarterly results today. Manglam is here to tell us what to expect from the company. Manglam.
Well, Marico has been doing well over the last 1 month or so. In fact, in the consumer space, it's been reporting better performance than all the other companies this time around. And the street expects that to continue itself, because the company in its fourth quarter update itself has said there will be stable demand trends amidst improving trajectory in rural. And they expect consolidated business at low double-digit growth, along with India business posting a sequential uptick in underlying volume growth. They expect marginal growth in operating profit, and that's something that the street has adjusted itself for, given the high prices that we've seen in copra. So overall revenue growth seen at 17%, close to around 2665 crores. The EBITDA grows just 4%. That means a margin dip of nearly 200 basis points, and the net profit grows around 5%. The number you're looking at is 335 crores. What the street is working with is a mid-single-digit volume growth, anywhere between 5 to 6%. This is largely in line with what the company reported in the third quarter itself. Parachute coconut oil saw some transient sluggishness in volume, so the management is positive about the next year. Saffola did well, and value-added hair oils also exhibited gradual improvement. That was a piece in their business which wasn't doing particularly well. That is showing some sort of improvement.
Thank you very much for that. Marico numbers are today, but State Bank of India's Q4 numbers will be out tomorrow. Abhishek joins in with the key expectations. Abhishek.
Well, Rima, analysts expect the NI growth rate on a YY basis to be one of the lowest that you are seeing in last 5 years or 20 quarters. So the key things to watch out is that the business momentum on deposit growth may be below the industry level. So Motilal Oswal estimates deposit growth of 9.15% YY and about 2.7% sequentially. Advances growth rate to remain healthy. Again, Motilal Oswal estimates advances growth of 13.24% YOY and about 4.75% sequentially. Net interest margin, that can come under pressure both YOY and quarter on quarter. So Kotak Securities estimates a net interest margin decline of 34 basis points YOY and about 12 basis points sequentially. Now, operating profits could come under pressure given the fact that treasury gains would be missing. Again, Kotak Securities estimates a decline of almost 30% YOY in operating profits and about 14% sequentially. Slippages, they can remain stable or improve sequentially. That needs to be seen closely. Recovery and upgrades will be on the lower side, so watch out for write-off, which can actually aid the gross NPA. So gross NPA as per Motilal Oswal is estimated at 1.96% versus 2.07% in the previous quarter. So asset quality can remain stable or improve sequentially. Watch out for management commentary with respect to business momentum going ahead, net interest margin, as well as fundraising and ROE target that they have. Our poll suggests NII growth of just 1.9% YOY. We are working with a profit decline of more than 17% on a YOY basis. Back to you.
Kotak Mahindra Bank, what are we expecting?
Well, again, for Kotak Mahindra Bank, the expectation on NII weakness will persist as, analysts have done with SBI. So Kotak Mahindra Bank, the NII growth on a YOY basis could be at 14-quarter low, while the PAT could decline the highest in last 20 quarters on a YOY basis. A key thing to watch will be the business momentum. That will be the key. Deposit aggression has been seen with large private banks. So will Kotak Mahindra Bank to sustain it or not, that will be seen closely. So deposit growth and loan growth as per Motilal Oswal is estimated at 5.5% YOY and about 6% YOY for advances growth. A net interest margin can decline YOY but remains stable on a sequential basis. DAM Capital estimates a net interest margin to be at 4.93% versus 5.28% in the same quarter last year. You need to watch out for the low-cost deposit momentum. With other private banks, they have gained, CASA ratio on a sequential basis. So whether that will be seen in this result or not, will be seen closely. Last quarter, their CASA ratio was at 42.3%. Slippages can remain elevated, especially from the unsecured portfolio, which can cause pain, and personal loan slippages may taper off in this quarter, like we have seen with other private banks as well. Asset quality too remains stable. Motilal Oswal estimates gross NPA ratio at 1.5% versus 1.5% in the previous quarter. Management commentary and outlook will be an important factor to watch out with respect to business momentum and credit costs going ahead. Our poll suggests NII growth of just 7.6% YOY, while we are expecting the profit to decline by nearly 9.5% on a YOY basis. Back to you.
Thank you very much for joining in. Anand Tandon is now joining us on this last leg of the show. Anand, thank you very much for joining in. Very, very choppy for the markets. Last two trading sessions were quiet, but today the mid-caps are giving way. The advanced decline ratio is negative. Your thoughts on the way markets have underperformed globally? There is that, Pahalgam angle as well, which is localized, and that could be a headwind for the Indian markets vis-a-vis the global peers. But how have you approached markets and the way the earnings season has panned out?
I don't think the market is paying too much attention to Pahalgam right now, because the rally in the recent past has actually been better than what would have happened if one was worried about the geopolitics. I would argue that at this stage, because the rest of the markets around the world are doing a little better, probably because of the assumption that President Trump is going to kind of step back from the most extreme views in terms of tariffs. So they had performed rather badly, and therefore, now that the assumption is that some of that is not likely to happen, and they may also perform better from here. I guess that you are seeing a little bit of reallocation from the Indian markets. I don't see any major change in mood at the moment because of geopolitics.
Okay. All right. Just stay on. We'll come back, Anand, with some more questions in a bit. But let's revisit the big story of the day. And that is, of course, JSW Steel and the big blow that's come in from the Apex Court, considering the resolution of Bhushan Steel has been struck down. Abhizir Devanji, founder at Neostrat Advisors, is with us. And he's watched a lot of this over the course of many years and decades. And I remember, right from the time the IBC law was framed, Abhizir, we've been having these conversations. So what does this really mean, and where does it leave things? We all know that this use of optionally convertible debentures, this was not viewed favorably by the court. But shouldn't the company of creditors, or shouldn't the NCLT or NCLAT have struck this down at an earlier phase, at an earlier stage?
It should have, but I don't know where in the law it says that all of the funding needs to be done only by equity, first of all. I think this is the first for us. And imagine 2016 is when the law came in, and rightly so, we've been talking since. And we are now 8 years on, and we still haven't cleared everything on the interpretation side, which is shocking, if you ask me. So the new interpretation now is that you can only use equity to fund a resolution plan, which is absolutely incorrect, in my view. Because if you look at the IBC Act, it says that you can fund it. You can even lever the assets of the corporate debtor, as long as the equity is owned by the resolution applicant. So in this particular case, the resolution applicant did own the equity. And we are now saying that optionally convertible debentures, which in every form is debt, is not an acceptable mode of funding and should have been all equity.
Abhizar, we just spoke with the partner at India Law LLP, bankruptcy IBC specialist, who've been sort of with since the IBC was introduced. Shiju, I don't know if you know him. His point was that he made this point that under IBC the resolution is not like. It's not his view was that it's not restructuring. You're not putting together an M&A transaction. It's not supposed to be. At least that's not how it was meant. So how do you view that?
It's a resolution. So IBC as a law says that we are not doing a restructuring, but we are doing a resolution. What that means is that we are not effectively restructuring the debt of the company. You have to restructure the debt of the company because that's the reason why a company is in NCLT. But what they're saying is this is not a recovery. This is a resolution. Resolution means you're keeping the enterprise stakeholders intact. What does that mean? You can reduce the debt, which most people have done, by the way. That's the reason why we have haircuts on privacy. You can retrench people. You can reduce operational creditors. You have to correct the balance sheet of the company to be able to revive the company. That's the sole intent. Now, as part of correction of balance sheet, if we are changing the capital structure of the balance sheet, that cannot be not allowed. You cannot say that I will only equity fund it.
Okay, now...
And where is the interpretation coming from, Abhizir? Because, I mean, from what our court reporter, what our colleague told us, was there were two major issues that the court had with this. One was the use of these OCDs, and the second was the delay in implementation. So if the IBC law never explicitly stated that resolution will only happen via full equity, then where has this issue arisen from?
So that's really what one needs to understand in terms of seeing the real judgment. Because as far as IBC is concerned, that there really is no restriction on cap structure. In fact, it actually says that you can lever the assets of the corporate debtor. What does that mean? That means that the corporate debtor, which is the company which is in NCLT, their assets can be levered to raise money. So, by the way, if you look at what DHFL did, DHFL, the owner, Piramans, who bought the company, did take leverage on their balance sheet, which ultimately moved into the leverage of the corporate debtor's balance sheet because they merged the two companies. So effectively, what has happened? Effectively, in those resolutions also, we have gone and levered the assets of the corporate debtor. So there is precedent of leveraging the assets of the corporate debtor. What is an OCD? An OCD is a form of debt, by the way. Optionally convertible debentures, even in law, is classified as debt. It is not equity. Now, if it was permanently, it was compulsorily convertible debenture, it would have become equity. So now if debt is allowed to be levered, to be taken on the corporate debtor's assets, then I don't see on plain read where is the issue.
We'll have to look at the judgment, as you said, Abhizir, and that will give us more. But now, this is as things stand. What is it? I mean, what happens from here? There are lots of banks involved, exposure. They've been paid money. So what happens operationally?
Another unprecedented thing, but I'll tell you the issues involved. One is that this company has been run by a monitoring committee and the resolution applicant, which is GSW in this case. They've been running the business. The business has turned profitable because steam turned through a cycle. Now they will say that whatever the profits earned during the period is ours. Plus, there is the cost of what we put into the company. There's a cost that will be earning some kind of interest to us. Then what happens to the process now? If you put it in liquidation, just by the way, you will realize lesser value than what you realize under a resolution process. So that is not, it's going against the very tenet of IBC, which says maximization of value. Now, the other thing that the Supreme Court seems to have said is that the creditors have not exercised their commercial wisdom. While the Swiss Ribbons judgment says that the commercial wisdom of the creditors is their problem and something which the courts don't interfere on.
Right. Abhizir, we have a table up on the... No, your point taken. You have a table up on which essentially highlights bank-wise recovery from the Bhushan asset. What do these banks have to do? Do they have to put this recovery amount in some separate account? I mean, how do they treat this with the judgment? Indian Overseas Bank, for example, collected some 760 crores. That's a recovery. It's about 2% of the net worth.
So that will have to be put in an escrow account for now, I guess, because till the resolution, what will happen is GSW will clearly go and appeal against the judgment for sure. It will also, if at all the judgment is not appealable, then they will file for damages. And those damages will have to be met out of this. This particular consideration will have to be paid back, whatever they have actually paid, and a new process will have to be run wherein the assets will have to be liquidated because the court has requested liquidation.
Just a quick clarification, Abhizir. So the IBC law is not prescriptive. You can structure the deal the way you want it. correctly. But in this case, isn't the issue that JSW Steel has not done what they had proposed to do? They proposed to fund it via equity. Instead, they have done it via equity plus OCD. Isn't that the crux of the issue in this case?
No. So they would have specified in the resolution plan that they will do a combination of OCD and equity. Now, that is what the court seems to be saying, that this is something that the COC as well as the insolvency professional should have picked up and not allowed. So ab initio, this resolution plan is not valid. And that is why they have said that, of course, the other reason being the delay. But the delay was also on a lot of other things. For example, Section 32A came about to basically give an exemption from ED acquired assets, which is basically saying that any assets which is encumbered through any other process against the promoter is released to a resolution agreement. So those kind of questions were also there. So I think that the delay has happened because of matters being sub judice and certain matters being resolved in the courts. So that is one of the reasons of the delay. The other reason of the delay, of course, is the other reason of the rejection is the capital structure, which the court seemed to have objected to, which we should look at the court judgment to figure out exactly where they opposed it. But at the end of it, what seems to be a problem is unwinding these kind of transactions after such a long time is going to be a super nightmare to do. And if it is now put into liquidation, historically liquidation has earned only a fraction of what resolution has earned. So the banks will have to provide it maybe at some stage more to what they currently are recording in their books.
What complication. Just when you think at least this one large asset was all done and dusted, simplified. By the way, I did check with our colleague Ashmit. I was very curious to know where this arose from. So the petitioner is an operational creditor, Kalyani Transco. So the operational petitioner moved this in the court. I'm assuming probably didn't get their entire dues. And then they moved the court on this.
I hope this doesn't open Pandora's box of troubles where seemingly closed transactions are now open.
Abhizir, come in on this.
So
very quickly.
One more data point on the operational creditors. Overall, the operational creditors, from what I saw of the plan, have been proportionately paid better than the financial creditors.
Oh, and then, even then they're miffed. Wonder what's going on behind the scenes here. But thank you very much. Very complex, and we'll need more of your perspective perhaps in the days and weeks ahead as well, Abhizir. Thanks for taking this one. You have a good rest of your Friday. Thank you. We'll take a break on that note, come back with more market talk in just a bit.
3 minutes to go before we wrap up trade. It's been an exceedingly volatile one, but we end pretty much flat on the Nifty and the Sensex. The midcaps underperforming, negative advance decline ratio. For the week so far, the Nifty is up 1.8%. The midcap index is just up close to about 0.2%. So that's the tally as we close out this week. In conversation with Anand Tandon. So Anand, based on the earnings that we've seen so far, where would your preference lie? Have you been purchasing any stocks?
I don't think the overall strategy of the portfolio could have changed very quickly, given the fact that most of the earnings have been a little tepid. So if at all you are still anticipating how much kind of degrowth from what the analyst estimates, you should be factoring in for the next year. The only thing you can say is that it is not looking as bleak as it was, let's say, a month ago. But at the same at the time when the US decided to impose tariffs. But it is not going to be back where it was. So actually, you will have a slight slowdown in the overall economic growth of the world. So the changes that will happen will take a while to go through, because you are already seeing a 70% drop in container traffic going to the US, for example. It will take at least 3-4 months for that to come back, even if everything were to go back to normal. So this year is pretty much a washout. You have to look a few years ahead. So I think the secular trends are what you should be looking for.
Had a few more questions, but out of time, Anand. So speak to you again soon. Thank you very much for joining us today with that quick one. Well, I think you got the market, which is ending absolutely flat, 20 points lower. And I think nothing very much as far as the overall market is concerned. 1,600 stocks lower, about 1,100 stocks higher. So market breadth was slightly negative. Nifty Bank ends, way off the highs. For the Nifty Bank, the high today was 55,700 almost. And we end about 650 points off the high of the day. Actually, similar is the case for the Nifty as well. The high today was 24,589, which means that the day's high for a brief period, we actually took out that 61.8% retracement of the full fall from the highs late last year to the April lows, and then, of course, sold off pretty dramatically. And I think the mid and small cap indices will come up, down about 1% on the mid cap index, and I think the small cap index ends about 0.17% lower.
Well, we're going to take your leave on closing bell, but it's going to be an action-packed weekend. State Bank of India and Kotak Mahindra Bank release their Q4 numbers, and then always Global watched what happens with Trump tariffs. So those headlines will be awaited. Thank you for watching this show. Don't go anywhere. On the other side is our special editors roundtable.
ब्रेक में चले